we accept there's some anxiety. They are spending more than you lot thought they would. They have some growth. Where in the equation are they sitting for you?
Yeah, I think right now it's a timing mismatch. I think they're getting overly penalized for a number of elements. I think there's kind of a vote of no confidence from this market around the ability to grow and serve OpenAI, both on the OpenAI front, quite frankly, and the Oracle front. And I think that's a mistake. We truly believe that compute demand at the moment is insatiable. It's not just insatiable for OpenAI. It's insatiable for other foundation model companies. It's also insatiable for other hyperscalers. I think even on the Microsoft call, they noted how much more demand that they had in the quarter for Azure that they couldn't supply. So we're pretty confident that the demand is real, that the demand is there. And we continue to see accelerating growth with the company stating pretty clearly they, A, expect to maintain investment grade credit, B, they don't believe they will need to spend more than, and quite possibly significantly less than $100 billion in debt. And on OpenAI, A, they believe they're very much good for it, but that the demand is truly fungible. And if OpenAI can't make those commitments, there are a lot of other...
No, I appreciate that. Negative free cash flows, 10 billion, right? And the debt pile you point out has hit $106 billion in debt. This chart is Oracle 5-year CDS. Oracle CDS at the highest level since 2009. Credit default swaps, the cost of protecting debt against default. It's a chart, but it's a reaction. And the 3 points you just made, clearly, there's a large portion of the market that doesn't share that viewpoint with you.
Yeah, look, I think the CDS chart, I think it was important for Oracle to state that they expect to maintain investment grade credit worthiness. I think that there's also a number of flexible options that they presented on the call yesterday, like the bring your own chips, in addition to the ability for customers to lease. So I think that they are very vigilant about the level of debt that they're willing to take. They have a number of other options, including issuing equity. But at the end of the day, the overall CDS level is still relatively low for a company of Oracle's size and stature, and we don't believe that is indicative of any kind of risk for them to fail to meet their commitments.
Alex, I loved your note, and I love the idea that you're sort of saying this is a tough crowd, basically. But you did reiterate outperform, but you vastly decreased your price target from $400 to $275. Is that more because the market is just not going to push up the stock in the way that you actually think could be vindicated? Do you still think 400 could be vindicated? It's just the market's not going to go there.
Yeah, I think it's 2 points. I think it's important to point out that since our last price target, the comps have compressed, the relative multiples have come down. And number two, look, we are vigilant of current performance as well. I think for the stock to work, back to some of those more lofty angles, I think you need clear evidence of meaningful outperformance on cloud revenue and the IaaS side, not in line or slightly below. And as the confidence kind of returns to seeing those investments converting to revenue at higher and higher clips, to where at this point, it looks like Oracle is going to be the fastest growing mega cap software company, and it is the cheapest mega cap software company. So as those two things start to converge, I think you could get back to those lofty highs.
Alex, what's so interesting about your coverage range is that you're a software guy. You're also looking at Adobe, and we've just had Adobe numbers, but of course Oracle has made this huge pivot into almost now infrastructure eclipsing its software revenue that it brings in now. But just taking a step back, the whole AI bubble debate and whether or not we're going to be good for productivity gains in the amount that we're currently spending, do you think that there is a bubble or that we're in a fine kind of space?
I think it's always hard to call a bubble when you're in the middle of it. We do see a tremendous amount of productivity enhancement that is happening in the industry. And I think depending on where you are and what part you're looking at, you can have a completely different picture. I think at this point, if you're an engineer or if you're a software developer, you can't imagine life without agentic coding. You can't go back to a time when you weren't using one of those tools. And the availability, the abundance of compute is increasingly leading to a renaissance of software development and code creation. I think if you're kind of a traditional knowledge worker, you're still kind of waiting to see that 10x, 100x improvement in your capabilities. And I think that's natural because those things are a little bit more nuanced depending on where you work, what your role is, how much data, how much risk your firm's willing to take. So I think it's a natural progression, and folks have to remember this is a journey. This is we are still way away from that destination, but it's an extremely exciting time to be in this space, and I do think that we are on an accelerating growth path for many of the companies that we cover.
Alex, I'm going to recap just really quickly. Capital expenditures slightly ahead, a few $1 billion of where the street thought it would be, but impressive growth in cloud. The stock, a decline of 14 to 16%. Would be, if we close this level, down the most in 23, 24 years. Is Oracle good at technology, Alex? Very quickly.
Yeah, I think Oracle's great at technology. I think Oracle, for multiple decades, has been able to make the pivot to the new, exciting secular domain. It takes time, like it did for Oracle in the cloud. I would argue that they've made the pivot to the AI compute cycle much faster. And I think over time that will serve in their favor as their ability to take their existing customers and convert those customers to both an AI cloud first and AI native world with a full stack experience, not that dissimilar from what Microsoft has done, will put them at the forefront of a lot of these secular waves.